Alright, boys, looks like the price of crypto is trying to recover and the prophecy is finally coming true. This might be the last opportunity to get in and make life changing wealth. At the time of recording, just like I said it probably would in my video yesterday, Bitcoin is breaking above $70,000 and it looks like it's confirming that it's going to be continuing to the upside. It does look like it's reaching a little bit of resistance here at $70,000, and we do have these levels of resistance right above us. And usually whenever it's starting to reach all-time highs like this, it means that you're going to see a little bit of selling because people are just not sure if it's going to make new all-time highs, and a lot of people just bought at the top last time. But whenever we break above this $70,000 level, it looks like we're going to be reaching price discovery mode, and I still think that that price target of $100,000 on this bull flag is still in play. As you can see, we continue to perfectly bounce off of this parabolic trend line, and right now it looks like if we continue to bounce off of it to the upside here, we're going to be going super parabolic here over the next few months, and we could be reaching $100,000 before the end of the summer. There hasn't really been any big breaking news for the crypto space specifically, but one reason why I think we're actually pumping right now is because it looks like several banks are now in danger of actually collapsing. According to this article on CoinGape, it looks like the FDIC has just announced that 63 banks are facing collapse as they just saw $517 billion in unrealized losses in Q1 of 2024. It looks like the commercial real estate sector is still struggling, and as I continue to say, and I've been screaming from the rooftops basically, the Federal Reserve's Bank Term Funding Program actually ended on March 11th of 2024. That was just a couple of months ago. And this is really the only thing that's been holding us up since the collapses that we started to see in the middle of last year. Last year, we saw the most banks in terms of dollar amounts collapsing since the Great Financial Crisis, and then the Fed came out of nowhere, creating that Bank Term Funding Program, basically so that they could just take out loans and support themselves in case of them having an imminent collapse. But now that that program has ended, it looks like there's not really any safety net, and they continue to have interest rate risk, which means that the Fed is probably going to have to come out and do something before people are expecting them to. We do have the next Fed meeting in about 8 days at the time of recording, with a 99.9%, and this being the most percent I've ever seen, of people expecting there to actually be a continuation of the pause. If we do start seeing some of these banks actually collapse and it becomes a real big contagion issue, then I think we're going to see them do an emergency meeting, and they could actually lower interest rates or announce some kind of new program to fund the banks and keep them from collapsing. Either way, this is going to cause a lot of liquidity to be injected into the system, and this is going to devalue the dollar and send hard assets like Bitcoin skyrocketing to the moon. Right now, it looks like we're not expecting our first rate cut until September 18th, which is going to be 2 more Fed meetings from now, but if we continue to see the economy struggling, then I think they might have to do something more drastic. Today we did get the JOLTS job openings released, and it came in lower than expected at 8.059 million, with the forecast being 8.37 million, and the previous being 8.355 million. This means that the economy is continuing to slow down, and we do have some more important data points like initial jobless claims coming out here on Thursday, and I think these are going to be really important data points that the Fed is going to be looking forward to see if the economy is actually collapsing and if they need to do something to bolster these banks or if it's going to cause inflation to kick off again. In my opinion, it's obviously going to cause inflation to kick off again. There might be long and variable lags just like there were with the rate hikes, but whenever they cut these rates, it is going to inject liquidity into the system, but there might be some suffering for the economy in the coming months before it actually starts to trickle through. Also on Friday, we have average hourly earnings, non-farm payrolls, and the unemployment rate. These are really important data points to see if what the Fed has been doing is actually having an effect. And as we continue to see the consumer struggling, I think the narrative is going to be changing over the next few months, with people expecting us to be having a soft landing or no landing, and the reality being that we probably have a severe and very steep recession coming up in the pipeline. To be clear, I think we've been in a recession for quite some time already, probably at least a year or so, but they don't want to admit it because they know that a severe crisis or some kind of banking collapse is actually on the way, and if we've already been in a recession before the crisis actually hits, then what are they going to call it after that? In my opinion, this is just another one of these situations where the government is trying to put a band-aid over this gaping wound and act like there's not really something bad going on. But the cracks are starting to show, and eventually they're not going to be able to continue with this sham, and people are going to realize that it's not just them that's been going through some economic turmoil, but the whole economy is actually struggling. In other news, according to this article on Cointelegraph, it looks like Deutsche Bank and Bitpanda have now joined forces for real-time crypto payments. I don't know anything about Bitpanda, but I do know that Deutsche Bank is one of those banks that was about to collapse last year, and while they are a German bank and they don't really have anything to do with the Fed, I think if they continue to see any kind of struggles, then it could add to the contagion effect, and maybe they're actually trying to get into cryptocurrency because they see that it's one of the only things that can make them money and pull them out of a potentially desperate situation. According to this other article by Cointelegraph, it looks like the Bitcoin hash ribbons are now flashing the first buy signals since the $25,000 Bitcoin price. It goes on to say that Bitcoin is going a lot higher, says Capriola Investments, and hodlers may not need to wait until summer to be over for sky-high Bitcoin price gains. I've covered Capriola Investments in the past, and they're actually the ones that put out that indicator which shows the price production and basically the floor price for the Bitcoin. I think these guys really know what they're talking about, and as they say in this article, it is perhaps the best long-term Bitcoin buy signal that there is. The hash ribbon is now tempting us with a current minor capitulation which started 2 weeks ago. This metric measures the 60-day moving average of hash rate against its 30-day equivalent. The capitulation occurs when the latter drops below the former, signaling a slowdown. The Bitcoin halving means that old, inefficient mining hardware becomes obsolete and no longer profitable to run. This causes costs to exceed revenue from the block rewards, and these mining rigs will typically then be phased out over several weeks following the halving, result in falling hash rates just as we're seeing today. This pretty much goes hand in hand with the production cost or the electricity cost for Bitcoin, and with it having dipped down below that recently, I think that does represent a really great opportunity to buy and get ready for the next leg up, and this pretty much just explains what's going on actually, and why the price has fallen below the electricity cost. It says this also happened in 2023, but the price was also trading in the 20,000s when the last hash ribbon buy signal occurred. This suggests that the metric still has incredible predictive powers today. Here you can see that hash ribbon, and before when it did go into this orange territory, or basically when the miners were last in a losing situation, this was a really great buying opportunity because the miners would phase out the old hardware and then get some new hardware which increases the hash rate, and generally the price follows the hash rate. This means that right now, with us seeing another minor capitulation, this could represent another really great buying opportunity and the lowest price that we're going to be seeing before the next parabolic run-up in the price. Finally, we do have Thailand approving its very first Bitcoin spot ETF, this according to Bitcoin Magazine, and this is a continuing trend of what I've been expecting, with us seeing other countries following the example that the SEC has set forth, approving the Bitcoin spot ETFs and allowing big institutional players like BlackRock to get into the game. This is causing massive competition, not just here in America, but all around the world, and I think that this is a trend that we're going to see continue and possibly even ramp up. It's not just spot Bitcoin ETFs that are going to be leading an example here. According to this article on CryptoSlate, it looks like more U.S. states are also expected to follow Wisconsin's lead by investing in spot Bitcoin ETFs for their pension funds. Pension funds have really been struggling to keep up with the rate of inflation, and one of the only assets that actually does beat inflation is Bitcoin and other cryptocurrency technologies. For this reason, I do think we're going to see a lot of other states following Wisconsin's example, and they're probably going to be adding these Bitcoin spot ETFs to their pension funds as well. If you didn't know, most of the money in the world is actually in retirement funds just like this, and this could represent one of the biggest inflows of capital into Bitcoin that we've ever seen and we might ever see in the future. Additionally, I think we're going to be seeing sovereign wealth funds and all kinds of other big institutions and governments around the world allocating Bitcoin to all kinds of funds, and this could actually be the bull market where Bitcoin does reach mainstream adoption and break out of the S-curve and leave behind all of these diminishing returns that it's been seeing in the past. This is pretty much what we saw during the adoption of the internet, And if it's going to happen, then I think it will probably be in this bull run, because as I've said, we've never seen big institutions and governments and pension funds like this putting money into Bitcoin, and it does represent most of the money in the world. So let me know in the comments, what do you guys think? Is this going to be the bull market where Bitcoin breaks out of that S-curve and brings us astronomical gains that we're never going to be seeing again? Either way, thank you guys so much for watching, and don't forget to hit that like and subscribe button if I brought you value. But most importantly, don't forget to do only good every day, and I'll see you guys next time. Bye.